If you could teach Kenyans just one thing about money, what would it be?
Discipline. Discipline means, let me not even say discipline. Well, discipline is like the backbone of financial freedom. Let me say that. Everything financial freedom is anchored upon discipline. The one thing that most bankers and people in the finance field will tell you is pay yourself first.
Yeah.
That means save before you spend. For instance, if you work in any organization, before you're paid, there are statutory deductions, that is SHA, HELB, housing levy, all of that, which are done before you even get your money. You can easily do a standing order with any bank and tell them that at the end of this month, before you give me my money, deduct say 5,000, let it go towards this investment or this savings, then give me the rest. So at the back of your mind, you are budgeting for, if you are getting 50,000, you're only budgeting for 45,000, because that's the money that you have in the back of your mind, that this is what I'm getting. You have automated that whole process of saving. That means you pay yourself first. Small, that is one. That's the first concept. The second, last thing is small efforts always build up to something. If you're saving consistently, even if it is 10 shillings or 20 shillings, if you save even 10 shillings for a whole year consistently, that is over 365 shillings in a whole year. That is just 10 shillings. What if you do it with 1,000 shillings or however amount you can? Small efforts build up to something bigger.
Welcome to another episode of Financially Rewired podcast, and today it's going to be about the first letter of Financially Rewired, which is finance. So it's Finances Day, and there's a lot that we get wrong about money. Personally, whatever I know about money, I have picked it from either books or people I interact with. Growing up, I wasn't taught much about money, but now when you grow up, you realize that money is literally everything. And today in this episode, I'm joined by someone who interacts with the money literally every day. I usually ask myself, if I used to work in a bank, what can I do? Probably I would have carried out a money heist. But how much is enough money? So today in this episode, we are going to understand what are the things we get wrong about money. My name is Mavali Derek, and my guest for this episode is?
My name is Phill Nickson.
Phill Nickson. Wow. Phill, you are a man, so I'll start with a more general question. Recently, someone claimed that nowadays men are rarely seen in parties. Men are rarely seen in clubs like before. What could be the reason, as per you?
Well, I guess you can't go into a club unless your pockets are loaded. And the general idea is going into clubs, you're going there to, well, of course, have fun, but of course you also need to spend. Well, I guess the more people, the more open-minded people get about the concept of money and savings and wanting to have more of it, you realize that spending it more on things which are vanity is not the way to go.
So we can say men have awoken in the sense that bars are wasting their money.
Yeah.
And is it true that men withdraw the most on Friday? And women deposit the most on Monday?
I don't know who took those statistics.
It was literally everywhere. Actually, I even see it on Nairobi Gossip that men withdraw the most on Friday, and then on Monday, women deposit the most.
Yeah. Well, I can't say for certain. I cannot confirm the truth of that statement, neither can I affirm it.
Okay. Now let's go to your story. Basically, before we get into the space of money, who is Nickson?
Who is Nickson? I am a born again Christian, of course. I am a practitioner in the field of finance.
Yeah.
I've been in banking for about a year now. Yeah, basically I'm a love of life, nature, music. Yeah, that's basically me.
Do you read books?
Yes, I do.
Which is your favorite currently?
My favorite is called Grace for the Afflicted.
Okay, I haven't read that. Today's conversation, I'll be picking so much from the psychology of money. Yeah, I think it's one of the finance books that I have read that opened my eyes to certain concepts about money that I didn't know about. Someone told me about the Millionaire Firstly, and I've not yet read it, but I think I've read Psychology of Money and I've read Rich Dad Poor Dad. And maybe to begin the conversation, what's the biggest misconception whereby we most Kenyans have about banks?
One of the biggest misconceptions that I have interacted with is that banks want to take your money. Banks want to steal your money.
But it's true.
No, it's not. It is not true. Banks don't want to take your money because ideally, when you deposit money in a bank,
Yeah.
that is a liability to the bank.
How?
How? When you deposit money on a normal current account,
Yeah.
that means you can withdraw it at any time. That means that when you come today at 12 midnight and say that I need my 10,000 back,
Yeah.
I will have to give you back that 10,000. That means that you deposited it and it was there. It was money which was yours, belongs to you. I'm just a custodian. So if you need it back, I need to give it back to you.
Okay.
Yeah.
Still on banks, which is the other misconception we have about how money works now?
Other misconception about how money works. About interest, maybe.
Yeah, but basically when it comes to that, they say money grow. There is deposit this amount of money, it will grow at 0.5% interest per annum. So let's say if I deposit 100,000, I expect maybe to withdraw with something on top.
Okay. There are different kinds of accounts. First of all, there's a current account. That is for your day-to-day activities. You want to pay for fuel, you want to buy groceries. That's the account you have. It's in and out, just credit and debit. But now there is a savings account, which different kinds. The most common one is the fixed deposit account. So the fixed deposit account, you say that I'm going to deposit, say 100,000 for a period of 3 months. Then the bank will auto-calculate and they'll tell you that if you deposit this 100,000 within the 3 months, we will give you say 5% interest on this 100,000. So when you come and collect it on after the 3 months, you will find your 100,000 plus an extra 5,000. That is the 5% which has accrued over that period of time.
Okay, I've deposited 100. How many accounts should I have to logically survive life, to logically attain financial freedom? Actually, I have never understood the concept of financial freedom. Is it when I sleep, I wake up, I check my bank account, man, I have 500,000 balance?
Well, that's a huge topic. But let's say financial freedom, ideally, people will define it in different ways. But my definition of financial freedom is being able to wake up today and I need my rent paid and I pay it. without having to hustle, without having to break the bank. That for me is financial freedom. Being able to afford your lifestyle. That is financial freedom. Being able to spend and still have more or have surplus. That is freedom. So basically, when it comes to growing to a point of financial freedom, it is not a destination per se. It is a journey which involves a lot of discipline and strategy. You need to first of all understand how banking works, which is well, the first question you asked is why are people having, okay, basically I interpreted it in a way that why do people have a negative attitude towards banking in some way. And my answer would be, or my question rather, would be how many people fully understand how the bank works. I think it's a problem both systemic and of knowledge, ideal of the knowledge by the people. People don't fully understand how the bank works. Well, of course, there is that part of the bank looking for interest. That is a systemic part of it. Banks, even in business, back in high school, we learned that when you're doing business, the primary need for you to do business is to make profits. So I guess for the longest, banks have been profit-oriented rather than helping people understand how the system works, how different accounts work. I feel like I'm taking you far.
Tubaki hapo kwa accounts. How many accounts should a person have?
For starters, a normal person, you need a savings account. That is a must-have. Then, of course, your current account. So I would say, for a normal person, ideally you should have at least two accounts. One for your day-to-day transactions, the other one for your savings.
So, I have two accounts. Basically, 85% of people don't understand how banks work. We're having an argument of what happens the moment I deposit my money in the bank. I remember there is a bank in Kenya that was shut down and people lost their money. And someone said, the first thing is, if I deposit money in the bank uses this money to trade on a global scale. Another person said, the bank stores money inside the bank. So if I need the money, they give it to me. So what really happens?
What really happens?
When I put this money in a bank?
That's a very, very good question. So you see, every bank that has been chartered to take deposits by the central bank that regulates all of this. So if they have been chartered to take deposits, they regulate every bank within the country. We are in Kenya, so every commercial bank which is a deposit taking bank, that doesn't necessarily have to be a commercial bank, but as long as it's a deposit taking bank, they have to be chartered by the central bank. So I am here, I have my 10,000. I'm taking it to the bank. So what happens is, you'll take that 10,000, you'll deposit it to the bank. What the central bank does, it gives directives to these banks that there is a minimum reserve that every bank needs to have. So they would say it is usually, it changes, it varies over time due to factors such as inflation and all of that. So when you take your 10,000, deposit it to a bank, the bank, if the central bank decides that maybe for every bank, your minimum reserves should be, say, 14% or even 10%. This bank that you've deposited your money can only, is required to remain with at least 10% of this amount. So if it was 10,000, it will have to remain with 1,000 shillings as reserves that is stored in the central bank. This remaining 9,000, it trades with it. It can either lend to another person because you are depositing it, there is another person who would want to borrow
the
it.
money.
Yeah. So they can lend up to 9,000 of this money to this other person who ideally would take it to another bank. And that cycle continues like that. So from that lending, they get the profits, which is now where the business comes from for the banks.
So is it true what people say that banks make money from nothing?
No. It's very true. Have just explained that if you bring your money, of course,
Okay, if I'm to say banks make money from, I make money from business. I'll do work, I'll make money. So banks make money from me. Me depositing money.
No.
So where do the banks get money if I don't deposit? If let's say everybody decides not to deposit money in a bank.
So the bank doesn't make money out of nothing. The bank does a lot of things. They invest in real estate. They invest in shares. They do a lot with the bank. With the money, they lend it out to clients, and from that they get the interest.
Oh.
Yeah.
Now, we talked about financial awareness. Now let's come to financial literacy. I think this is something that is affecting a lot of people. And I want to understand, how does poor financial literacy affect our growth as people?
Poor financial literacy makes you, one, think that the financial system is meant to put you down. See how people have this idea that the government, or the police unity, which is supposed to protect the people, is now the one that is fighting them.
Yeah.
That's the same idea that I have met with people who still bank their money under their mattresses, who put like bundles and bundles of money under their mattresses. That is risky, because if one day the house goes up in flames, and you've amerudi from a millionaire to
I remember someone asked what if now the bank catches the flames.
if the bank catches the flames, well, one, they have reserves. Two, they're insured. For every bank which has a fault.
Yeah.
I'm not sure that you share this, but I'm sure you've seen, even for, say, 4 major banks, as long as they store money in a safe, that money is insured within their trading period, their office hours. That money is fully insured. So if anything were to happen to it, they would claim insurance on it.
That's a reason you need to put money in a bank. So let's kill the idea that pia mimi pia pesa yangu bank itachomeka. How can I leverage the basic banking products to grow? Because I think this brings me to the concept of bonds, stocks, and all that. How literally can someone leverage on this?
How you can leverage on it is very, very simple. There are different products which work for you. There are low risk products like the money market, fixed deposit, which will always accrue some percentage of interest once you store it there. Then there are the high risk ones like the bonds, bills, which obviously take a longer period to accrue. So basically, one, you need to have the discipline. That means when you have your money, you need to plan how you're going to spend this money before you get it. Once you have it, you start setting a target. Say, for instance, if you want to invest in treasury bonds, the minimum amount you need to have is 50,000. So you can tell yourself, I will give myself a period of, say, 5 months. I will save up, you break it down up to the least possible figure. Say daily I'll be saving up 500 or 5,000. That will help me reach this target by this time. Then once you do, you take this money and you put it in treasury bond. Or you can choose to start saving. Ideally, the things someone needs to have. One is an emergency fund. these are types of savings. One, you need an emergency fund. This will ensure that if anything were to happen, if today you're to get laid off, you have security. Usually, it's advisable that you save. An emergency fund is enough money that could last you for 6 months. So that means you need to have a clear budget of how much you spend within a month. Then you calculate it for a full 6 months. Then you start building up on this emergency fund. That should be the first thing that you do once you get salaried or once you get a steady source of income. So that if anything were to happen, then you have a whole 6 months to figure it out. That's the idea. Yeah. You also need to make investments. There's so many bank products which you can leverage on that will help you to escape poverty.
How do bonds work?
How do bonds work? This is basically the government has budgets, but a percentage of it is not fully funded by the revenue from businesses, from taxes and everything. So they need to reach out to individuals to get money from them to fund this. Then after a period, it becomes payable. So basically you lend to the government, of course through the banks and financial systems. They use the money, then you get it back with a percentage.
Oh, there is usually an argument. Money market funds and bonds. Which is the best of the two for me as a Kenyan to invest in? Some say bonds are not secure. Others say money market funds are not secure.
The money market funds are very secure. They are low risk, but they are very secure because it's like fixing your money. Once you take your 100,000, put it in a bank for a year, you are sure, come rain, come sunshine, I'm going to get this 100,000 plus the interest which I got promised about a year back. That's the same thing with money market. You're putting your money in. Basically what money markets do, they trade with this money. It's just the same concept as banking. You just take this money, maybe put it in real estate or any other financial ventures, then it accrues interest, then you're given a percentage of that.
So we can say money market funds ni wale watu wako na roho ndogo.
Yeah, those are not ready to risk.
This brings me to the concept of coins. So bonds, we have money market funds. Then, of late, kumekuja vitu world coin. There is this Binance and all that. Before, would you advise someone to invest in buying these coins?
Cryptocurrency?
Cryptos and all that, world coins and all that. Because I saw somewhere, someone was calculating how much is a bond right now? Is it 100 and something? Or is it?
About the least you can invest in bonds, 50,000.
50,000. Yeah. In money market funds, I can invest the least of?
Depends with the money market, but most of them range between 1,000 to about 3,000.
Yeah. So you've said money market funds are the safest and the most surest way, whereby if I deposit in 1 year or 2 years, I'll get that interest, right? Yeah. So someone has searched somewhere abroad, has crafted this world coin, he has brought it. I'll buy it at let's say 200. So since I have 1,000 shillings, I'll buy like 5 coins, and yet I can buy money market funds that is just 1,000 and be sure of making money, of making an interest. So is it advisable that if something crops up, that is, because I know people who bought, how are they called? There's someone who bought something and he held it and right now he has made a lot of money. But it's usually, I think it's a gambling game to me. So would you advise me to buy coins?
Well, for one, you need to always do your due diligence. There are coins like Bitcoin, Ethereum, which have been around for quite some time, and they are gaining that traction and confidence from people. Of course, I have heard so many stories of people who come up with coins. Well, the other day, the son to the president of USA also come up with his own type of coin. Well, I've heard of so many stories of people who come up with different types of coins. Then they collect all of that money and then they just vanish. So of course you need to do your due diligence, because cryptocurrency, in my opinion, is the future of banking. But it is a field which hasn't fully been regulated, or currently even in Kenya it's very, very recent that the National Assembly has come up with regulations for
cryptocurrency. Yeah.
Very, very recently. So it's a field which is still being discovered. So currently, I wouldn't say confidently that you can invest in most of those coins which are coming up. Give them some time. Cryptocurrency Bitcoin has been around for over 10 years and it's still growing. So there's so many coins out here. There's so many, but you just need to be wise. Do your own due diligence. Know who is behind everything. Then before you place that investment, fully understand what you stand to gain.
If I want to invest in anything, be it real estate, be it coins, be it Bitcoin, be it crypto, what are the things I need to look for? Because not everyone knows that, but I think there are those key things that if I look onto this, I'll decide whether I should invest or not.
I'll use the example of real estate. If you want to invest in something, basically anything, the most important thing would be what you stand to gain. If it is interest, how much am I going to get after what period? And is it safe for me to invest? Because it is not necessarily that when you invest in something you're going to get something back. If you invest in real estate, probably it was riparian land, so later on the government comes and claims that land. So you need to do your full due diligence, understand who you're dealing with. If you're dealing with brokers, understand who they are, understand who the real owner of that plot of land that you want to buy is, and are there any future prospects of, basically you would usually invest in land if there are prospects of development, that land. That's why there are certain areas which you'd go last year, they were like completely bare, like here in Kilifi, some place there in Narang, that place a few years back was completely bare, but because of that prospect of development, now the land goes up in value. And when it does, that becomes your capital gain.
What do banks wish customers understood when it comes to credit, interest and repayment?
Credit, interest and repayment. Well, first, loans, any kinds of loans will always affect your credit scoring. Credit scoring, basically, what people refer to as CRB, is your credit worthiness, which is measured between 0 to about 1,000. The higher your value is, the more creditworthy you are. The lesser your value is, the less creditworthy you are. And when you go for a loan in any of these financial institutions, that will deter you from getting a loan. So one, you need to understand that when you get a loan, it is your responsibility to ensure that you pay it. And you pay it in a timely manner. That is one. Interests, the different kinds of interest. There are two major types of interest. One, there is one which is, we call it a flat rate. So when you take 100,000, if we give you that 100,000 with a flat rate, that means it will be, if it is 15%, it will be 15% of the 100,000. So you'll pay a total of 115,000 throughout that whole period, that whole tenure of your loan. Then there's a reducing balance. So if it is 15% and it's a reducing balance, if you took 100,000 for the first month, you'll pay 15% of that full amount, 100,000. But on the second month, if maybe your installment was 10,000 a month, on your next month it will be 15% of the 90,000. and it reduces like that. It's the interest on the principal amount.
Okay.
Yeah.
I don't understand why they said be attentive in your math class. We are on loans. There are two debts. There is a good debt and a bad debt. What's the difference?
Difference is, I say this a lot, when you take a loan, take a loan if you really have to take that loan. 2, take a loan if this loan you're going to use it to find a means of repayment of this loan. So basically, when you take a loan, if you have to, then put it in a business or go and buy bonds or something that will earn some interest for you, which after this period you won't struggle in repaying this loan. But that is a good debt. A bad debt is when you take this loan for pleasures. If something like a car, for instance, or you want to buy a new phone or you want to buy new shoes, that is something you can save towards, because it's not something that you need immediately. You can always save up to buy a car. Give yourself targets. If buying you give yourself periods and save towards this, because if that car was, say, 1.5 million, if you save that 1.5 million, you'll go and buy that car. But if you choose to go and take a loan to buy this car, that will mean that you're buying this car for its initial amount plus the interest for the bank. So if you're to pay that 1.5, the interest for 1.7 thousand for a car which is valued at 1.5.
Should I buy a car on high purchase?
No, still the same thing, because it accrues interest.
Let me stop here for a minute. We are on the path to building the greatest of all times podcast from Africa. A podcast that helps you reshape how you think about money, self-growth, empowerment, and a podcast that helps you pick lessons from people who have achieved what you have achieved and people who have information from various aspects of life. If you believe in what we are doing and want to be part of this journey, take a minute of your time, recheck if you have hit the subscribe button. If you have not yet subscribed, kindly subscribe to this channel. Enjoy the rest of your viewing.
Okay. We talk about investment a lot. And sometimes, especially in a setting life, we are torn between investing in circles and all that. But now let's come to banks. What are some of the investment opportunities that bank offers that we usually overlook?
For instance, the most basic one is the fixed deposit. That is one you can just fix your money and you get passive income. There are money markets popping up each and every day. There are so many opportunities to invest. There are unit trusts. We have treasury bonds and bills you can also invest in, which can accrue interest, of course, for you in the long term.
How do risks work in banks?
Basically, if a risk is higher, then what you stand to gain will be high. If the risk is lower, then what you stand to gain is lower. For instance, I've said the fixed deposit. For that, your risk is very, very minimal. That means most of them, the interest on them are usually ranging between 5 to around 12% per annum.
So I invest today in a bank, in a money market. Then inflation happens. Are there chances of I losing?
Are there chances of you losing? I don't think so, because your money has been accruing interest. So that means that today you invested 100,000 in a bank, and it was earning you, say for instance, 10% interest. So that means by this same time next year you'll be having 110,000. Your initial the initial value of your money was 100,000.
Yeah.
So even if inflation came and the value of this 100,000 came down to say 95,000. So what you could initially get for 100,000, you're only getting it at 95,000. You're only getting 95,000 out of this. You have your 10,000, which adds on to this. So basically, you're not losing.
Also, my profit won't be affected. It's only my initial.
The interest or the profits that you get from this money will replace the loss from inflation.
Now, this brings me to, okay, most forex traders feel very happy when there is a, how do you call this news? It's CPF or what? And this brings me to when the country is now releasing the budget. Someone told me that whenever your country is releasing a budget, it's very crucial for you to take note of everything that has been mentioned during that budget reading. How does a budget reading affect how I'm going to live life in relation to my money for that financial year?
When a budget is read, it gives provisions for maybe reduction in taxes or introduction of new taxes. There are usually categories for taxation. Usually you would find there are certain goods, I know you've had this term, which are zero rated.
Yeah.
This means that they are not taxed at all. And there are other, of course, the usual commodities which are taxed. So when the government releases the budget for the year, it gives out provisions for either an increase in tax or a decrease. So eventually this will add up to what you'll be paying. Say if they increased the tax for maybe import duty, or maybe on a particular commodity, say on say even maize or import of tea, or tea, that would mean that the value, that the amount that you used to buy tea for, of course, will go up.
Yeah.
That will affect, of course, your day-to-day living.
If let's say the government reads the budget and then there is something that they're going to invest in, let's say for instance the new education curriculum or something. Someone told me that if your government announces they're going to provide, there is like a lot of money that is going to a certain place of that budget, that you should think of how to invest on that space. As a person working in the bank, would you advise someone to do that, or I should take maybe time to also understand that field before putting my money there?
One thing that always affects the value of something is prospects. Like, for instance, back at my home, there is this a very, very small college which people had that the county government in that area was, or had a desire to turn that into a university. So this hope, or this idea that people had that, hey, this small institution is going to now be turned into a bigger thing, that meant that more business ventures would be there, more people would come there, and the more people means, of course, more money. So ideally, people will go and start building hostels, people will start building hotels all around that place in anticipation for the building of this
University.
Yes. So that's the same idea with that.
Which I guess the university was never built.
Well, it's still in still in development.
You know, it's similar. It's similar to someone we were passing back then. I was when Ezekiel was now coming in. He had not built this site, the filling station and this hotel, and then he had said he's building a pool. So rumors were Olympics, the World Olympics, that the finals will be played at Mabueni. So my good friend gets a piece of land there, builds Airbnbs, and until date
they have never been built.
He has never gotten clients, to be honest.
Well,
so I think prospects are bad.
Prospects are both It's called wishful thinking. Prospects are both
Good and bad.
good and bad. Well, they are good if they materialize.
Yeah.
But if they don't, then that's a bad investment.
Actually, it also let's say it's AFCON. AFCON is to come to Kenya in a year also. 27 or 28, I don't know. I know people right now are thinking of building hotels because these players need a place to sleep. But I think a lesson I've picked is before you build that hotel, ask yourself how many people are having hotels in Nairobi or even in Mombasa before building.
Well, I think also before you build or you invest in something,
Yeah.
I think most people usually invest. I would call that an impulsive investment because you're investing it because you think that it's going to serve this particular people in this particular time. Say maybe if a university is being built, for instance, it's going to serve those people. But now, a good investment will answer the question, what else can it do? I've been around this place a lot. I've seen so many hotels and Airbnbs which are empty.
Yeah.
That is because these people built these places having the idea of hosting people for holidays. So outside of holidays, what do these places do? That should be your primary source of income, not the holidays.
I know of a BNB that gets client only in December because of the Beneath the Bobble Festival. Because this festival carries people from all over the world. I think it's the biggest festival in Coast. After the festival, even graduation of one university does not get clients because mzazi amkuja leo, ye kesho narudi kwake. I can literally sleep pale pwani in the tent rather than getting a BNB. And I usually ask myself, what do I need to look for before making any investment?
Longevity. How can you sustain this beyond the picture that you had for it? For instance, if you're building that BNB, what other demands can it sustain? What other needs can it fill aside from just it being a BNB? Because if it's a BNB and it's a BNB for like 1 week in a whole year, for the rest of the year, how will the bills, what are the bills going to be paid? How are the workers they are going to be paid? Because you cannot tell me that for just that 1 week you can pay your workers for the whole year.
Yeah.
Yeah, it's practically impossible.
If you could teach Kenyans just one thing about money, what would it be?
Discipline. Discipline means, let me not even say discipline. Well, discipline is like the backbone of financial freedom. Let me say that. Everything financial freedom is anchored upon discipline. The one thing that most bankers and people in the finance field will tell you is pay yourself first.
Yeah.
That means save before you spend. For instance, if you work in any organization, before you're paid, there are statutory deductions, that is SHA, HELB, housing levy, all of that, which are done before you even get your money. You can easily do a standing order with any bank and tell them that at the end of this month, before you give me my money, deduct say 5,000, let it go towards this investment or this savings, then give me the rest. So at the back of your mind, you are budgeting for, if you are getting 50,000, you're only budgeting for 45,000, because that's the money that you have in the back of your mind, that this is what I'm getting. You have automated that whole process of saving. That means you're paying yourself first. Small, that is one. That's the first concept. The second, last thing is small efforts always build up to something. If you're saving consistently, even if it is 10 shillings or 20 shillings, if you save even 10 shillings for a whole year consistently, that is over 365 shillings in a whole year. That is just 10 shillings. What if you do it with 1,000 shillings or however amount you can. Small efforts build up to something bigger.
Of which I think we'll have to do another episode on this, on saving and investing. But this is a question someone asked me. Do I need to save? Okay, he earns 15,000. So this person feels like the 50-30-20 rule does not apply to this amount of money. Like honestly, this is very small. This is very small amount of money. But still, you have this desire to one day be financially free. So today, I'm from school. I get a gig somewhere. I'm earning 15,000 a month. How do I plan this money out?
50-30-20 rule applies to any amount that you get. That means that 50% of it is your expenditure. 30, that is on. Usually, how I break it down for myself is the 50% becomes expenditure, 30% is on the luxuries, then the 20% is broken, 10% goes to, no, I break it down to 50, then 20% of it is savings, then I'm remaining with 30%. The 30%, the 20% of it is now what goes to things I don't necessarily need, but I would want to have. Then the 10% of course is my time. So that means if you're getting that 15,000, the quality of life that you choose to live should reflect that 15,000. That means you cannot go and stay in a house worth 10,000. Doesn't make any logical sense.
Okay. So if I'm to just grow this 15,000 logically, what duration of time do I have to give myself? Because I usually feel like the New Year resolution goals don't work anymore when it comes to money.
No, people are just not disciplined. People are not, you don't want it enough. You would not want it enough to do everything to get it. I wouldn't give you a specific timeline for you to get financially free, but you yourself can give yourself targets. You know the exact amount that you get. Start breaking it down. I have goals. Say I want to invest in maybe even the money market fund. I need a minimum say of 3,000. So let me start saving. I get the 3,000. Let me invest. It starts accruing its own interest while you do it again consistently for the whole year, through the whole year. The next year begins the whole process up until the time when you get to retire. That's the time now you get to relax and start enjoying your money.
Wow. I don't want to get into how to invest in money market funds, how to invest in bonds. I think I'll plan another conversation for that. As we end this, you said cryptocurrency is the future of banking. How do we start preparing ourselves for such?
Start getting knowledge of how that works. All of this knowledge is in the internet and ChatGPT. People are these days are a fan of ChatGPT. Start getting that knowledge, fully understand how crypto works. Start understanding which cryptos have been in the market for the longest, which cryptos are which ones resonate most with the larger majority. Then slowly start building yourself up to a point of being able to invest in these currencies. And they, of course, they do accrue value over time. I've heard of so many stories of people who invested in Bitcoin back then when it was still a concept, was being piloted. And right now they are millionaires. It has rocketed in value.
Does Forex work?
Well, I haven't been in that field, so I wouldn't say for certain that it does, but it doesn't.
But banks are the largest traders. Someone said there is a misconception in Kenya whereby whatever we are shown on the internet is not the real thing. So everyone is feeling the need to put their money there to accumulate the overnight success. And I know when you interact with, when you do economics and finance, you're taught about these things. So before I get my entire money into Forex, what do I need to ask myself first before either investing in that 1 month class session or investing that 5,000 and then blowing up my account?
Well, Forex is another field that has been really corrupted. There is a lot of stories about, you invest, you pay some amount, I teach you how to trade. But basically it's just knowing when a currency will appreciate in value.
Yeah.
Which do you think you can control when a dollar gains its value or the pound goes low in value? Because these are not factors that people can control. So seeing that you have a full understanding of how this and that would go, that is skeptical. Well, I haven't been in that field as much, so I wouldn't say much about it.
Yeah. I have a lot of questions to ask, but I won't ask in this session. I have a lot of questions around saving and investing. Personally, I'm also beginning the journey of life. It's not like I'm perfect, so I'm having a lot of questions. I've been listening to Susan Wanjiku. She did banking, then she right now does consultancy, and she speaks a lot of MMF, a lot of bonds, and all that. And sometimes we just feel like I need to get a session to understand really how does it work. Even if I'm to buy shares, people say buy shares. Safaricom shares are 100 bob, 200 bob. But how do shares work? And I have a lot of questions, but I won't do that in this episode. Maybe as we end this. Which book will you recommend to people that they'll read in December and in January and then 26 they can have a new mindset?
On money.
Yeah, on money.
Well, I guess Rich Dad Poor Dad. That is one book that fully spoke to me about financial discipline.
Rich Dad Poor Dad. Invest in assets. I'll give you a book. Go read The Millionaire First Learn. And up to that point, that marks the end of our today's conversation. I think I now understand a bit of how the banks work. And I think it's a very wrong misconception we all have that banks take money from us. And also it's a very bad misconception I had, because my first salary when I was working was actually 10,000 and I cannot tell you what I did with the money. So whichever money you have, we will have an episode probably early next year that will talk more about saving and investing, so that 10,000 I get, when it's December and I'm auditing my finances, I'm able to understand where did I take this, where did I take that, and where did I use this. Up to that point, my name is Mobali Derek. I'll see you in the next episode.